every type of product, but especially crypto, is driven by how liquid it is. Adding or taking out cash is easiest to do in this currency. So I was right when I said that the bottom would happen in 2022 based on the cash cycle. And the parts of the liquidity cycle that look ahead will still be in effect well into 2025. That means I don't need to worry about anything. That's why we're looking at the changes in cash. The market for cryptocurrencies. Raoul Pal, a famous macroanalyst, crypto enthusiast, and former Goldman Sachs executive, says that the cryptocurrency market has been hurt by tighter liquidity conditions around the world, which have been made worse by the Federal Reserve's policy. Pal thinks the chaos might last a little while longer, but he is sure that the Fed will soon stop tightening and quickly announce a policy change that will, among other things, start the crypto bull market again. Pal's most recent movie tells us what we need to know about the bull market right now and what to expect in the future. This tweet is really cool because it shows that Bitcoin has had 5 bull markets. Should you want to ride a bull market to the top, you'll have to get through the following: 6 drawdowns of 5% to 10%, 3 of 10 to 20%, 2 of 20 to 30%, 1 of 30 to 40, and 1 of 40 to 70%. That's all during a market boom, so you have to have a certain amount of guts. To ask, has my thesis changed, you have to be able to turn off Twitter and your screens. Is this technology no longer being used? Does it have any other reason to slow down? What part of the business cycle are we in now? I spent a lot of time trying to teach you guys that this is a major asset that moves with the business cycle. That's all. Like tech stocks, it looks to the future, and the cash cycle drives it. Has the business cycle changed in a way that makes us think the crypto cycle will fail? Well, most likely that's not a yes. That's why it's corrective price movement. Also, if you have some extra cash lying around, you can use these fixes to add. That's what I did. I was lucky enough to have some cash, so I bought more Solana. Good job. I also found that it holds up really well over time. One of the best ways to get a better return on this space is to take advantage of the drawdowns. I didn't run out of any of the big recurring ones last time. I had no plans to do that. It wasn't like I missed the top or anything. I knew it would be hard to get back in. You can't add X sum back in after taking it out. You bet less because you don't wish to lose everything. Everything about your mind is wrong. I just want to add what I get about the big downsides. When you keep adding, you get back to all-time highs long before the market does. And that is a real ability. What's going on now? What's wrong with crypto? The same reason tech has been shaking. It was happening that it's cash, stupid. The Fed's balance sheet, which they've been doing QT, controls the flow of money in the US. They've been tightening it, which makes it harder to get cash. But the Treasury has made up for that by drawing down the reverse repo. The reverse swap is the opposite of what the QT did. And now for the other part of the equation, the Treasury General Account. Janet Yellen is in charge of this account, which is like the US government's checkbook. She has been putting that together. But these have meant the based on cash back in 2022. It's been going a little higher. You learned from the everything code cycle that there is no way to pay off your bills. People now use the word fiscal dominance. This is the code cycle I've been talking about for 2 years. The everything code cycle says that the system has too much debt if GDP growth is too slow. Either interest rates need to go down or growth needs to speed up. Now, over time, growth is caused by changes in population. That's not something we can change. You get growth that goes up and down, but not the overall trend rate growth, which has been slowing down. The government sector has 100% of its GDP in debt, and the private sector has 120% of its GDP in debt. This means that the available GDP has to pay the interest on these loans. That's why we don't have enough GDP to pay the interest. When interest rates are high, this gets a lot worse. The average rate of GDP growth is between 1.75 and 2%. So let's say that the interest rate on a 2-year bond is 5% right now. Then you add the private sector to that number and double it. Now you have 10% of that going to interest payments and a nominal GDP growing at 5%. The bond market has been going crazy because there isn't enough GDP. Experts say this is a sneaky way for the Federal Reserve to loosen monetary policy. It means the Fed knows it needs to cut rates and start loosening them as soon as possible. But the central bank is taking too long to act so that the market will believe them for a little longer. Pal thinks that the lie can only go on for a little while longer. Pretty soon the Fed will have to say what its plans are. And when that happens, the prices of crypto assets will go through the roof. Come back to Pal's movie. For this reason, there isn't enough GDP growth. This is the round of all the code. That's why it leads to excitement, or more cowbell, there are various methods that can be used to provide stimulus. That's why lowering interest rates is the most obvious thing to do. The road has been like that before. The other way is to add money to the system through a backdoor method. The one most people know about is quantitative easing. The other is taking money out of both the reverse repo and the bank general account. So those are usually those. Then there will be more. I'll talk about that in a moment. So where are we now? What's the point of the air pocket? Yes, QT was going on. Thus, they offer loans. It has been putting money into the budget because tax payments have been coming in. They leave money market funds and go to Janet Yellen's bank account. She hasn't spent the money yet, so it's taken money out of the system. It's just sitting there. By putting out short-term notes, she's been trying to help the market. The reverse repo is now empty. But today, the markets quickly turn around. In other news, Jay Powell said, "Hey, we don't want to sell as many bonds." This is called quantitative tightening, and it means that we're going to make it easier for people to get cash. Though Janet hasn't said yet that she's going to put out more short-term notes. The opposite repo is pretty much empty, so it's not really possible. She's going to wait until the election is almost over to open her checkbook and give everyone money. That's what she will do. That will happen in the second half of the year. That's more magic she did. She said, well, I'm going to keep selling these short-term bonds and buy back some longer-term bonds, and it's the off-the-run ones that don't have juice. But really, it's just reusing cash. Adding money to the system is what it does. Janet began to add cash to the system, and Jay is making sure that he takes out less cash. There is almost no more reverse swap left. There is still some work to be done, but then Auntie Janet will be the only one left, and she will start writing checks and giving money out. Basel IV is another piece of magic that's coming up next year that most people aren't aware of. Basel IV and the Basel deals are rules for how banks should handle their capital after the financial crisis. Because Basel I was put in place, people had to hold more regulation capital. That means you need to buy more government bonds. Basel IV is going to make that even stricter. That's why they're making banks in the US, UK, and Europe hold more government notes. What a good thing, because you need a bar of bonds to make the system more liquid. That's why it's coming. I believe it begins in Europe in January 2025. The US and UK will follow in June or July 2025. At a fundamental level, this means that money is coming into the system. They are making a new bar of bonds that is bigger. Things like that will happen more often in the future. Plus, we'll have a lot more cash on hand. But the Fed is the only one doing this. The ECB wants to start lowering interest rates in Europe. The market will start to get more liquid after that. Also, their big green energy plan to lower the cost of power in Europe is still being worked on, which is good for business. The UK's gilt market also blew up last year for the same reason. There is no doubt that they will add cash in some way, whether it's through rates or some other method they can hide. Basel IV makes it clear that all of these things help. Japan is really having a tough time. Its money is quickly losing value. They can't do much about it either. Their GDP is too slow for them to want to raise rates too much. They're also dealing with the everything code problem. They're having this trouble. The same thing is happening in China. It needs money badly. It owes a lot of money.